What's good, everybody? It's John. Come back at you on another video. So for today's video, I wanted to do a trade recap for the trading session today, Tuesday, April 29, 2025. So this session just wrapped up. Unfortunately, it resulted in me taking a loss. But the reason why I'm not concerned is because I consider this to be like my first actual loss that I took in the marketplace. Um, since I pretty much returned from trading, which has literally been like 3 months, right? It's been like February, the end of January, then it's like February, March, and April, because we're pretty much at the end of April. Um, Now, technically speaking, this would be like my fifth loss that I incurred, but um, the other four losses that I took earlier were all losses that were in my control. That it was either some sort of human error that I made on my part, whether it was like FOMO or greed or me just essentially being on the wrong side of the market as far as not correctly identifying bias, right? So I was essentially trading offside, right? So those are all things that I was in control of that led to losses. This right here was what I would consider my first actual loss just because I feel like I did everything right. It's just that it resulted in a loss, right? Like there's not a single trader on the planet that has 100% win rate or success rate, right? So I'm not trying to come off as being perfect at all, right? Of course, I make mistakes. Um, I just don't think that it was any sort of human error that I made on my part. But of course, losses happen, so no reason to be mad or frustrated or beat yourself up, right? It's okay. So here for Tuesday, April 29th, right? We will check Forex Factory, and of course today we had Jolt's job opening. So for this week, Monday, I was behind the charts. There wasn't a trade setup that presented itself on that day. And of course, we just wrapped up today. So of course, this is NFP week, which means I am not trading Wednesday, Thursday, or Friday. I'm basically leaving the markets to do as they please. So today is actually the last trading day of the week. Um, so here we go with beginning today. So today was sort of interesting as far as determining the bias because as you can see from this entire like range, we're seeing a lot of consolidation here, but this whole range like price kind of like stayed in this range from this high to this low. However, I settled with a bearish bias, and the reason for that is a few reasons, right? As you can see, price came up, cleared this high, which it was like, right, you see came purged it, and then price came down, broke structure, clearing all these lows, right? And you see this aggressive push down. So after this push, you see price made a rally higher, broke this high, and now you're seeing price go higher, higher, higher. So at this point, right, you're seeing signs of bullishness, right? Because price is respecting these fair value gaps and then pushing higher and pushing higher, right? However, eventually you'll see price make a little rally lower, right? Now you're starting to see price begin respecting some bearish fair value gaps. Um, right? You're seeing another fair value gap that gets created, right? Price is holding it, and then you're seeing here again, right, another fair value gap that price is respecting. On top of that, right, this last push up here, the last structure point was at this level that you see gets cleared with this long wick, this low. And even if you wanted to price to close under, right, price does in fact close under with this bearish candle right here. So for me, the way I see it, the reason why I was leaning towards being bearish is because you're seeing signs of bearishness, right? Like the bullish fair value gaps, right? Like this fair value gap right here ends up it just gets blasted through and obliterated, right? So you're seeing bullish fair value gaps being completely disrespected and bearish fair value gaps for the most part doing a pretty decent job holding. And you're also seeing, for example, if I zoom in right here, you're also seeing some swing highs get purged, right? Like price isn't closing above it, it's just wicking it and then it's going lower. So price just kept communicating to me that it wanted to go lower and lower and lower. Um, so that's pretty much how I seen it on the 15-minute time frame. Like ideally, I want to have the bias be in alignment with the highest time period as possible, right? Like the highest time frame from daily, 4 hour, 1 hour, etc. But I also want to be in alignment with actual order flow in the direction that price is actually moving, right? Because I want to make sure I'm on the correct side, right? So I'll just replay it, right? So here we are. So I like to get on the charts like around 9 o'clock, to get a feel to see what happened, right? So what we want to do, we want to get on the 15-minute time frame, and we want to see where 8:30 is, right? So this is the 8:30 candle, the candle open right here. We want to look to the left of 8:30 and see where, since we're bullish, I'm sorry, since we're bearish, right? Because seeing fair value gap get respected, this high gets cleared, and price is just tanking lower, right? Taking out all these lows, this low here, right? And this low down here. Seeing price go lower and lower and lower. Um, so it led me to have a bearish bias, right? So if we look at 8:30 to left, the nearest swing high is this high right here. So, yep, the 8 a.m. high, right? So as you can see, price comes up and clears it. So we can put the eyeball there, right? So price clearly came up and cleared. So here's the other thing to do. This is also the reason why I stuck with my bearish bias, right? Because price came up, it cleared this high right here. It also cleared this high. But if you look at it, these pretty much make very smooth. Like you don't really need to count this because this isn't a swing high, but like it looks like it's very smooth like a line. And what happened? Price came up and cleared this, right? So you see clears there. Price came up, cleared it, and also came in and respected this fair value gap. So price just continuously showed signs of um, you know, bearish PD arrays being respected, like bearish fair value gaps being respected, and liquidity purges, right? Liquidity was purged here, purged here. See how price came up, cleared it, and then rapidly just ran away from it. That is what we want to see. Those are signs of bearishness. So for me, I couldn't justify being bullish on this day. It was, to me, it was clear that price was bearish. So that's what I settled with. So essentially, I see price going down and tanking. Me personally, I wasn't necessarily expecting to take a trade today because I didn't think an opportunity would present itself, but of course an opportunity did, so I took it, and then it resulted in a loss. So I'll go into detail for that. So here it's 9 o'clock. So now let's get closer to 9:30. So this candle right here, this is a 9:30 candle. So here's what I'm thinking. Because I'm bearish on price, right? If I'm bearish, then I'm expecting price to go lower, right? So I'm expecting price to go lower, then I'm expecting price to eventually go down. And for it to go down, it would need to clear out these lows down here. So once the 9:30 open, I marked up the low because this is also the low of the day. So if I'm bearish, I'm expecting price to continue heading lower and ultimately clear out these lows, right? Very logical. So 9:30 open happened. So because liquidity was already taken here and the fair value gap was respected with this high, um, I'm now anticipating that price doesn't want to come up above this level anymore, right? Because liquidity was already taken. So I'm expecting for this fair value gap to be respected, or this fair value gap. Ideally this one because it's like a deeper retracement. So I'm expecting price to respect this fair value gap and then ultimately go down. So that's why I was not anticipating any sort of setup on this day. But of course, to my surprise, price didn't respect that fair value gap. At first, it initially did, and then price blasted through, which this didn't really cause concern for me because I understand that after 9:30, when price is bearish, right, it's also very normal for price to do a fake bullish run, right, like a fake rally higher and clear more liquidity before wanting to make a push lower, right? Like that is a very normal thing for price to do. Um, so price does come up, and what happens? It ends up clearing the high, and this push right here ends up making the high of the session. So right now, it price is delivering all the signs to be bearish, right? It's pushing higher, higher, higher into new liquidity, and then you know it might offer a break of structure lower, which in that case, right, if it does that, then we'll be looking to take a trade. So price comes up, clears its high. So now I want to see, um, because since this blue line, this was previous buy side liquidity, it got taken here with this move. So now, in order for me to even consider trade, this new high essentially has to be cleared because I wanted to make the high of the session. in order for me to look for any setup, right? So now, since the liquidity was taken, buy side liquidity was taken again. Now, what I want to see an aggressive bearish move, which I wouldn't consider this to be an aggressive bearish move because most of the candle is wick. But nonetheless, I still want to check the lower time frame to see if there's any sort of break of structure. So on the 4 minute time frame, this is the last structure point, right? 3 minute time frame is still the last structure point, right? 2 minute time frame still also the last structure point right here. So right now what I'm seeing is pretty much for any sort of break of structure to be considered, price would literally have to go under like for the go on the 4 minute time frame under this level right here. So I'm not really stressing. I'm just going to continue watching price. Now, we also have 10 o'clock news. So right here, this was the 10 o'clock candle. And as you can see with this bullish move up is a bullish candle. I anticipated the candle to absolutely just tank price and clear these lows because these look like, kind of like equal lows. Price didn't do that. Instead, it gave you a bullish move. And as you can tell, right, price seems to be respecting bullish fair value gap, which once again, it's okay because remember, if we see a rally up, then we're anticipating at least for the time being, that like bullish order flow is going to be respected, right? That's why price is pushing higher and higher. But eventually, if buy side liquidity keeps getting taken and price brace structure to the downside, then at that point, we would be expecting bearish order flow, right? So here we get a push up, and then his next candle, right? An aggressive push up. So this candle here not only clears this high, it also clears this new high. It is also clearing liquidity up here and didn't get up here yet, but you guys get the idea. You're seeing previous highs getting cleared. Now, because I'm seeing all this liquidity get cleared, I'm waiting for 5 minute aggressive bearish candles to the downside. This wasn't really an aggressive move. This obviously had a bit more momentum, so I would basically be dropping down the time frame to see if I'm seeing anything, right? This is the recent swing low, hasn't been cleared, right? Same thing, recent swing low hasn't been cleared, but what you're also seeing is, remember, we were just seeing these fair value gaps get respected, right? Like this bullish fair value gap got respected. But then what happens with the next bullish fair value gap, right? It gets traded through. Price just disrespects it. It trades right under it. So you're seeing already how generally when price is bullish, it generally respects bullish fair value gaps, and then when price is bearish, it generally does that with bearishness, right? So we're still not seeing anything. Um, so I'm just here waiting, right? You see another aggressive move, which is a good sign. Nothing yet. And now with this candle down, this candle trades through this low right here. As you can see clear as day. And it also forms a bearish candle. So we have bullish move that clear liquidity. Price aggressively moving down, right? Look how many bearish candles back to back. That also left a fair value gap right here. And the fair value gap was obviously left between the displacement low right here and the displacement high. So if I highlight it in pink, right, this is the displacement range. Um, and we clearly see a fair value gap that falls within this range right here. So the one thing that I wasn't a fan of is the risk reward, right? Because if I put my short right here and put my stop loss above the high and then put my take profit down here, this is under a one-to-one risk reward. So what I did, because it's a big fair value gap, um, essentially I tried to, or I move my entry a little higher because I'm anticipating price to eventually go into this fair value gap, right? So I was dropping into lower time frames to see if there was ever um, a fair value gap that I could take from a higher point, and there was, right? Like you see this fair value gap right here. And normally I don't necessarily do this. I normally just take the fair value gap that presents itself there, unless the stop loss is too big and the risk reward is like not good. Then I'll try to find, like in this case, price already met all of my confirmations of buy side liquidity get taken, an aggressive break of structure lower. You're seeing fair value gap that got formed by bearish candles, right? So technically speaking, I would take a sell from like this level right here, but because the risk reward isn't good, I'm trying to, like I'm looking for a fair value gap that allows me to have a better risk reward, which I do right here. So entry for me ends up being at this fair value gap. Um, which I don't mind because once again on the 5 minute time frame, all the confirmations are met. So I have my fair value gap entry right here for a 1 to 1.26 risk reward. Not bad, right? Because at the end of the day, as long as for me, I'm perfectly content with taking anything that's like a 1 to 1 or more, right? So this was a setup that I was looking at, but I was essentially managing it on the 5 minute time frame, right? So it's showing all the signs of price wanting to go lower, but as you probably heard from what I said at the beginning, I ended up taking a loss, right? So price just literally going against me. Then it had, bearish candle, but then it ultimately took me out at, you know, my stop loss. So what you guys need to understand, a couple lessons here. One, always trade with a stop loss because there's no guarantee. Like it is inevitable for you to take losses when it comes to trading, and having a stop loss, you want to put your stop loss in a safe, logical place so that if price tags your stop loss, then it's because you are wrong. It is because the trade is invalidated, right? Which is what happened here. Price came down, left the bearish fair value gap, so I took a sell, and then price came up and cleared my high, which at that point the trade is invalidated. So I would want to be taken out of the trade. It's just as simple as that, right? This is why you want to use a stop loss. This is why you want to follow proper risk management and calculate your risk before you jump in the trade, right? You don't want to over leverage and just jump in with whatever lot size without knowing how much you're risking, because at the end of the day, trading is, you'll be successful in trading the more you can minimize your risk, right? And you can help do that by calculating whatever percentage you're comfortable with per trade. Now, looking at this setup, of course, everything, it gave me all of my confirmations, right? And that's how it should be when you're trading. You should have a list of confirmation that you look for before entering a trade, and mines were met, right? You seen a liquidity grab, buy side liquidity get grabbed multiple times. You see clear as day a break of structure. You see a massive fair value gap, which is a gap that like is clear as day, like you can't miss, right? So I was expecting price to go lower, it just didn't. So that's okay, right? The fact that I had a stop loss in place and I calculated my risk, I'm able to see another day in the markets, and I'm able to live another day, right? And trade another day. So that's that. Now, looking back in hindsight, right now, if I just fast forward to present moment, obviously I don't know what's going to continue happening, right? Because right now, as you can see, we're now in live time. However, one thing I did notice now, it's very well possible that price came up to stop me out. Why, guys? I'll show you right here. What does this look like to you guys? Yeah, that looks like money, right? This looks like equal highs. So I seen this um prior to my session, but the reason why I didn't place as much emphasis on it is because you didn't really see these equal highs on the NAS, right? Like on the NAS, um right, if we look over here on the left side of my screen, you can see this high got cleared, right? It got taken here, then price came down, respected this fair value gap and broke structure right here, and price kept going lower and lower. And like Nas didn't really deliver equal highs, right? So I saw these equal highs on the S&P, but of course, because I was bearish on price, I was expecting these equal highs to be left alone for the time being, and price would eventually go back to it and attack it later on. Like that's very possible, right? Like that happens sometimes with price where equal highs or equal lows are made and price doesn't want to go after it right away. But now, of course, as I'm looking at the trade, right, price came up, tripped me in the trade, and then it took me out at my stop loss. Price came up, spiked up. Why? Likely because price wanted to purge. Let me do it right here. Likely because price wanted to purge the liquidity, right? Take out the people who sold up here before pushing price lower. So this is why, guys, this is why when you trade, you want to focus on knowledge. You want to focus on understanding the story of price, because whether you want to believe this or not, the way price moves isn't random. Well, it is controlled. It is 100% manipulated, right? The markets are not. It's not bulls and bears fighting for control. The market moves for orders. The market moves for liquidity. So right now, of course, on this trading day, I took a monetary loss, right? That's okay, because even though I took a monetary loss, right, on this trade, what you guys need to understand is I still learned something. I still am able to see, okay, why did price go up there and take me out? And it took me out because it seems like price wanted to go up there to clear these equal highs before actually pushing lower. Now, um, had price not left these massive fair value gaps, of course, there wouldn't be a trade for me to take. I would have just walked away without taking a trade. And price has a tendency to, when price isn't ready to deliver your trade setup, oftentimes it won't leave like these fair value gaps. So I'm not concerned about the loss. But you guys are seeing here, like, these things don't happen by accident, right? Price moves for a reason. Oftentimes it's for liquidity, it's for money, it's for orders, it's to rebalance itself, it's for all these variables, right? And this stuff is not happening by accident because I'm showing you this live. So it would have been, I guess, obviously the in hindsight, right, the perfect or the better setup would have been for price to go even higher to then clear these equal highs and then break structure and then, you know, take a sell. But now, obviously, when I'm looking at this now, it makes sense why I took a loss, right? Obviously, I did everything properly as far as following my strategy, but price just seems like price wanted to make the extra push to clear liquidity before now traveling lower. So who knows? Maybe price will just blast up and just keep going higher, or maybe price will go lower. Who knows? Um, I'm done trading for the week, and results in a loss. But you still learn something. But you still, even when you take a loss, it's not because your strategy is messed up or your strategy is broken, right? Like I said, I've taken over the past couple months, I've taken, you know, probably close to uh, anywhere from like 7 to 10 trades, maybe, that resulted in wins. And this, I feel, is the first actual loss in the market where I felt I did everything right that results in a loss. But that doesn't mean that my strategy is broken. In fact, it's actually working as it should. I just take losses from time to time, and that's okay. So hopefully with this video, you learned something. Um, I'm gonna keep posting more of these trade breakdowns for you guys as the trades happen, because I want you guys to become independently thinking and operating traders. But I hope that this video also gave you insight with how the market operates and how the market moves, and um, that there's a lot of logic to this. And I not besides I mean I don't even count these sessions as like an indicator, right? Technically is, but like I'm not trading with any indicators, right? Trading strictly price action, and there's more than enough information here that the candles give you, for you to make a decision and take the right trade. So hopefully you found value with this video, and this wraps up the recap for today, April 29th. So once again, guys, this is Joel, and I'm out. See you guys for the next video.